Welcome to a community update from the Department of Senior Affairs. I'm your host, Ed Nunez. Today's title of the show is Reversed Mortgages and the Retirement Income Crisis. And with us to discuss that is Gordon Mitchell, who is a reverse mortgage educator. And Gordon, first of all, welcome to the show. It's quite a title. I mean, you and I talked just a little bit. You did a presentation at Manzano Mesa a couple weeks ago, where I work at, the Multi-Generational Center. And I thought it was important for you to come on and give information about this topic. It's very important, and you just kind of educated me even before we got on the show about some things that you want to talk about. So I don't know if you want to make an opening statement and we get to these questions. You wanted to mention about the retirement crisis, which looms around the corner for a lot of us.
Yes. Yeah, and I really feel this is an important concept to deal with because there are 78 million baby boomers in this country, and I'm one of them. And that's the people who were born between 1944 and 1964. And the issue that many of us are faced with is whether or not we're going to have enough cash flow to live a comfortable retirement or not. And for a lot of people, for a lot of seniors, that's going to be tricky. In many cases, some of them only have Social Security. Sometimes there's a little extra pension funds, but for a lot of people, that's about all that they have. So at this point, what we need to do is to look at some ways that we can possibly create some additional income during retirement.
I think the other thing too is Social Security now is there. Because every president's had to deal with Social Security. George W. Bush wanted to have it as a retirement account, I believe. Mm-hmm. President Obama didn't do too much with it, and President Trump has said it wouldn't be touched. We don't know though, because they said these funds could run out by 2032. Is that they said that it's solvent until what year?
Well, what they're actually saying, I think the thing that I heard is it's good until 2032 or 2035, and then it would drop by possibly 25%. So they're not saying that it's going to run out and disappear, but they are saying that it could get tightened up.
So that's another factor to consider,
right?
In your talk here. So Gordon, first of all, tell us a little bit about your history in the financial services industry.
Okay, great. I've been in the financial services industry for over 30 years. I started out in 1982 as a registered representative with E.F. Hutton and Company, and I provided financial planning and investment advisory services. I had hundreds of clients that I work with. I switched careers somewhat in 1997 when I moved into the mortgage lending industry. And so I've been doing mortgage lending since 97. It's been since 2007 that I've specialized in this one reverse mortgage program.
And so you've seen some crashes, some ups and downs in the market, no question about that. I'm sure we can talk about that.
Sure.
And why do you feel that it's so important for people to really understand what reverse mortgage, what they are? Because you kind of gave me a little bit of a little schooling, but just a brief one.
Yeah.
So why do you think it's so important?
The main issue is that people are just unaware that the program even exists. It's been around since it was created in 1988. The first one was done in 1989. So it's been around for many years, and this is the FHA insured program. And most people are just not aware that it's around there. And or what's even worse is I ask people, 95% of the people that I talk to, I ask them about, have they heard of a reverse mortgage? Either they have not heard of it at all, or what they think they know about it is for the most part incorrect. So there's a lot of misinformation about the program. But the fact that there's so many million seniors out there, in fact, the numbers statistically, the numbers in terms of homeowners, is approximately 75 million homeowners in the United States. Of that 75 million, about 20 million of them are seniors who meet the basic qualifications for this program. So that's like 1 out of every 4 homeowners. Now, a lot of those homeowners are sitting with, in some cases, hundreds of thousands of dollars in equity in their houses. If they knew that they could convert some of that equity into additional cash flow that they could use to live off of, it would be a major benefit for them. But because of a lack of knowledge or misinformation, a program that could be very beneficial to them, they don't know about it. Or they've talked to a friend down the street who said, oh no, I'd never do one of those reverse mortgages. So they're talking to somebody else who knows even less than they do.
I guess I got to ask, because in this age of information highway where I press a button and I've got all kinds of information at my fingertips, it doesn't make sense. You know what I mean? It doesn't make sense because people can find out just at the stroke of a key.
Yeah, you're absolutely correct.
I just don't understand that. So you could explain why there's been misinformation or people don't know more about it.
Yeah, and it's kind of a combination of several things. When the program first came to the United States back in the 60s, it was not a government-insured and government-regulated program. So some of the lenders at that particular time had equity sharing agreements built into it and just did a variety of things that were not beneficial for seniors. So the government looked at this program, back in the 80s, and they realized, look, we've got all of these baby boomers. They're turning 65, 10 to 11,000 of them turning 65 every day. If we don't do something, the government is going to be on the hook for having to help to take care of us because they know that many of us don't have enough money for retirement. So that's why they created the program. And people think, well, gee, the government, why would they do anything for me? That's what I hear all of the time. Well, why would the government do something, for me? Mm-hmm. The reality is they're politicians. Politicians want to get reelected. And if they could come up with a program that somehow shows seniors that they've got more money in their pockets or creates more cash flow for them, it makes the politicians look like a hero. But the way the program is structured, it does not have to take money out of the government coffers because it has mortgage insurance is backed by the U.S. government, but the seniors have to pay money into that pool when they purchase the reverse mortgage itself. So the vast majority of the money is actually coming out of the seniors when they put their monies into the program to begin with, when they get the reverse mortgage. They pay
Okay.
Yeah.
Probably what people want to know too, would you give us a clear definition of reverse mortgage? Probably the other thing that might paralyze people into doing this is when they hear, the language. Sometimes people say, that sounds too complicated. I'm not going to do that. I don't want to,
Yes.
that might paralyze a lot of people.
You're absolutely correct.
So could you give us a clear definition of that?
Sure, absolutely. Well, in 1988, the U.S. Department of Housing and Urban Development, HUD, created this government guaranteed program. It's a home equity loan for homeowners who are 62 or older. It allows a person who qualifies to turn part of the equity in the house into tax-free cash flow without having to make a mortgage payment, sell the home, or even give up title to the property. They can still live in the house for the rest of their life. And the mortgage insurance that's associated with the program protects basically everybody. If for any reason when that senior dies, when the last senior dies, if that house cannot be sold for enough to pay off the balance of the reverse mortgage, then the mortgage insurance will make the bank whole. So the bank can't lose any money. But it also protects the senior and their estate, because if that house can't be sold for enough, this is what we call a non-recourse loan. They cannot go after the senior's estate or their family members for a penny. Everything has to be, they have to simply take that claim to FHA, and Federal Housing Authority's mortgage insurance pays them.
Interesting, because a lot of people are going to ask you, they're going to say, Gordon, it sounds like I need a lawyer for this. I mean, people might get bogged down in the details.
Well, that's also one of the reasons you asked me earlier, one of the reasons why the program hasn't grown more in popularity and why people don't know about it more is because it is more complicated than a conventional mortgage. And the people who do this program need to be people who specialize in it. It shouldn't just be anybody who just decides, oh, gee, I want to do reverse mortgages this week. So because of the fact that it is more complicated, it takes more time to understand it, it has to be done by people who are willing to sit down with seniors, to hold their hand, to explain to them how it works, and to show them the different strategies on how to use the program. Because there's some different nuances to the program and ways that we can help a senior to reduce their fees and closing costs, to get a little bit more money out of the program, a little bit more cash flow. But all of these things are only going to work if it's somebody who really understands how to work the program. So,
I see.
Yeah,
I see.
you're absolutely correct.
There's ways to get there. Please give us some examples of the strategies for using a reverse mortgage.
Sure. One of the things is, and there's probably about 5 different strategies, basic ones that I want to talk about first. First one is, if there's sufficient equity in the house, the reverse mortgage can be used to eliminate someone's mortgage payment. So let me give you an example. We can kind of work through some numbers here, and, to help people get a basic understanding. Let's say someone is 62 years of age, and let's say they have a house that's worth $200,000. At 62, FHA, Federal Housing Authority, will allow us to loan approximately 52% of the appraised value of the house. Now, on a $200,000 house, that'd be about $104,000. The reverse mortgage, we must be able to loan the senior enough money to pay off any existing mortgages. So the first thing we could do with this program is, let's say they had a mortgage still on a house of $90,000. We can loan them $104,000, not including any fees or closing costs. So there's enough money there for us to actually pay off that existing mortgage. That works. That's fine. We can pay off their existing mortgage. Now, they still have to pay their taxes and their homeowner's insurance, but they would eliminate their principal and interest part of their mortgage payment. So maybe that part of their payment is $600, $700, $800 a month that they've been paying on a mortgage. By doing this reverse mortgage and us paying off their mortgage, they now have another $600, $700, or $800 of disposable income that's in their pocket that they can use for other living expenses. So we do probably about 30 to 40% of the reverse mortgages that we do are specifically for the purpose of paying off existing mortgages. That's what a lot of people are using them for. If someone's got a home and they don't have a mortgage on it, or they've got a very small balance on it, the second way that a reverse mortgage can be used is to generate monthly tax-free cash flow. And so that's another thing that we can do with the program, and we may get a chance to talk about that a little bit more. The third thing that we can do with the program, and once again, if there's little or no mortgage payment on the house, we can generate or create for the client a line of credit. And it's just like many people have heard of HELOCs, home equity loan lines of credit, where they can draw against the equity in their home. Well, this is a similar program in some respects, but very different in some others. But the bottom line is, in that example that I just gave you, 62 years of age, $200,000 house, we'd be able to give somebody a $104,000 line of credit, basically, that they could draw against as they wanted to. Now, a fourth way that it can be done is lump sum payments. I mean, we literally can give someone lump sum amounts of money. However, the government has put some restrictions on how much we can give them within the first 12 months. So, we may have $104,000 that's available to them, but we may be restricted to not be able to give all of that $104,000 to them right away. We may have to wait at least 12 months before we give them the remainder of the money.
Over the course of 12 months, it's not 104,000 in a sum, it's scattered. Is that, what are you saying about
and let me
those payments?
maybe it's a good idea for me to at least explain to you why, and then I think it'll help to understand this a little bit better. One of the issues that we've had with reverse mortgages in the past is it used to be the case that you could take every penny of the money at the closing table, okay?
All right.
And some seniors took every penny of the money at the closing table and spent every penny of the money.
Right, except for other things, except what they were supposed to intend it for.
Exactly.
Okay.
And so at the end
that's what I wanted to ask.
Yeah,
Right.
so at the end of 12 at the end of 12 months, when it came time for them to pay taxes and insurance, they didn't have any money. So the government looked at us and they said, look, guys, we got to do something, because if they don't pay their taxes and insurance, their house is going to be foreclosed on. And, a lot of people here have heard horror stories of somebody being foreclosed on for having a reverse mortgage. Well, the only way you get foreclosed on with a reverse mortgage is if you don't pay your taxes and you don't pay your homeowner's insurance. But we've made a lot of changes in the program so that we've greatly reduced the possibility that that's going to happen for people.
Yeah, that's good.
Yeah.
Okay, there's a fifth thing I think you mentioned. You mentioned 4.
Yes, and the fifth one is that a reverse mortgage can be used to purchase a home. Now, this is a unique program that just started back in 2009. And it's called the Home Equity, the HECM for Purchase program, Home Equity Conversion Mortgage for Purchase. The way that it works is it's primarily for people who are downsizing, perhaps. They have a house that maybe they've lived in for many years. They've got a lot of equity built up in their house. So let's say we've got somebody who sold a house in California and they get here to New Mexico and they've got $200,000 from the sale of that house. With a reverse mortgage for purchase, we can take part of their money and we can give them a reverse mortgage for the other half of their purchase price. So we can usually do one of several things. Now, in the past, if that person got here to New Mexico, they'd call up a realtor. They'd tell the realtor, I've got $200,000. I want to buy a house, but I don't want to have a mortgage payment. The realtor would know they've got to find a house for this client for less than $200,000. That's it, With a reverse mortgage for purchase, we now have 2 other options. One of those is they could still buy a $200,000 house, but the homeowner would only have to put up $100,000 of his own money. The reverse mortgage would give the other $100,000. So they could buy a $200,000 house, but not have to put all of their equity money back into the house again. That's one option. The other option is we could double their purchasing power. We could help a 62-year-old senior purchase up to a $400,000 house. They would use $200,000 of their own money, and the reverse mortgage would provide the other $200,000. So it doubles their purchasing power. So the realtors, I teach a 3-hour class to realtors on how to use this program for purchase transactions. When they understand how it works, they're amazed because for them, it solves a major problem. They're not hemmed in to just finding a $200,000 house anymore. They have the flexibility to find a little more expensive house if that's what their client wants, and the client still does not have a mortgage payment. So that's the basic 5 ways that this can be used.
So win-win for everybody. Well, gosh, it sounds sounds so intriguing. I'm sure for a lot of people that are watching. How much money could be available to someone with a reverse mortgage? How much money? I mean, again, it's for the house, right? I mean, people will hear the money and right away they're like, I'm going to go on vacation with Uncle Jim or whatever.
Well, the reality
Right?
is the money can be used for whatever you want to use it for. You know, I tell people that's the good news and that's the bad news. Okay, because we have had some people who took out a reverse mortgage, took the cash, and they used it for some things that probably weren't the smartest things to do. Okay, but I also want to make it very clear to people: should you throw the baby out with the bathwater? I've heard some complaints, and people are saying, well, they might do something stupid with the money. Well, that's true. But should we take the program away from everybody because a handful of people did something that wasn't very smart with the money? Especially when we've got 20 million homeowners here in the country that could potentially benefit from the program. You know what I mean? So a couple of different ways that the money can be used pretty much for whatever they want to use it for. We don't put any restrictions on how the money is used. They can either have that line of credit, as I mentioned, they can get a lump sum or a monthly income on a $200,000 house for somebody who's 62. We could give them monthly income of about $540, $550 a month. And that program is designed to provide that monthly income for them for as long as they can live in the house. So they can't run out of money. If one of them is still living in that house, they're still able to, get up every morning and sit in the house and be there, then they'd have a check that would come in once a month for that $500 and some, just like clockwork. Boy,
how important is that? I'll tell you, you mentioned, we'll talk about the retirement crisis here in a minute. I want you to mention what that Nobel, what is he?
Robert Merton is a 1997 Nobel Prize-winning economist. And he's been around for many years, and he's traveling all over the world right now. And he's been spending a lot of time just trying to educate people, not just in the United States, because the retirement income crisis is a crisis that it's faced all across the world, not just in the United States. Not just in the United States. So for example, they have a program like this in Canada. They have a program like this in Australia. They've got a number of different countries that have this type of a program, in England as well. So there's a lot of older people in the society all across the world who are looking at a similar situation. They have not set aside enough money for retirement, and they've got a lot of equity built up in those houses. In fact, Merton says for working middle class people, the biggest asset they have is not their retirement pension, it's their house. And that's true for many of us in this country. And the other thing that he says is sooner or later he feels that to have a decent retirement, a number of people are going to have to tap into this. This is going to be an essential part of the foundation for funding retirement around the world. Now, this is something that's very important for people to realize because a lot of folks are sitting on several $100,000 in equity in their house and it's not producing 1 penny of income for them. Not a penny.
Yeah. And I'm sorry. Keep going, Gordon.
Sure. No.
I'm just, wow. I'm amazed because again, capitalistically speaking, this is a capitalistic country. You would think people would be like, hey, the word spreads like wildfire. I heard this, and this, and millions of people are taking advantage. You would think, right? Yeah. Anyway, I'm sorry. Go ahead.
Well, the biggest issue with this is, as I said earlier, when the program began back in the '60s, for example, there was a lot of programs that weren't as beneficial for seniors as they could have been. So FHA stepped in 1988 and 89 and created a program that has very stringent and strict guidelines on it. Fees, closing costs, all of those different things are mandated and controlled by the government now. Well, how long does it take for people to hear that things have changed? So a lot of people are still operating under the assumption that the program was the way it was a long time ago, or they hear about a news story that says there's an 85-year-old lady who got a reverse mortgage and she got foreclosed on. And I ask people all the time when I hear that, I say, well, tell me a little bit more about what happened. Well, I don't know what happened. All I know is that she got foreclosed on. Well, It's harder to get foreclosed on with a reverse mortgage than it is with a regular mortgage because you've got to make mortgage payments. So if you get foreclosed on with a reverse mortgage, it's because you're not paying the taxes and insurance.
Or insurance.
Yeah, and if you don't do that, even with a forward mortgage, you're going to get foreclosed on.
Foreclosed, yeah. I think one of the things that, what are the guidelines required? This is important too.
Sure.
For someone to qualify. Because
Yes.
people are going to be, when people hear this, they're going to be rushing, calling. What are the guidelines? I'm sure there are some.
Yeah, definitely. So one of them is this. One of the spouses has to be at least 62 years of age. That's one of the requirements. Now, not necessarily both spouses, because now the program allows what we call a non-borrowing spouse. And what that means is someone who is under 62 years of age. So it used to be the case with this program that if one spouse was 62 and the other one was under 62, some of my lenders would not do the program at all, period. Then there were some other lenders that we had that would do the program, but we'd have to take the spouse off title that was under 62 years of age. Now, there's a problem with that. And the problem is this. If we take one spouse off title and the other spouse who's older dies, then the reverse mortgage becomes due and payable. That younger spouse, if she's not old enough to do a reverse mortgage herself, or if she can't get financing for a regular mortgage, she's got to sell the house at that point. So there was a lot of problems and negative publicity that came up because some lenders were taking people off title and they were doing that, and it creates a major issue later on. So what FHA finally wound up doing is they created a table for the non-borrowing spouse that goes down to 18 years of age. So it literally means that me at 69 could marry an 18-year-old and we could do a reverse mortgage. And if something happened to me, she could continue to live in that house for the remainder of her life. Okay. However, they're not going to loan as much money on a reverse mortgage to me if I've got a young wife. They're going to base how much money is being loaned off of her age instead of off of my age, because she might be able to live in that house for another 40, 50, or 60 years or longer. So that's one of the things. So we can have a non-borrowing spouse. It must be your primary residence that we're doing this reverse mortgage on. The house has got to meet basic FHA standards for safety and for safety and cleanliness, and make sure that the house is basically in good shape. There's got to be sufficient equity in the house. And when I say sufficient equity, earlier I was talking about at 62 years of age, we could loan about 52% of 52% of the appraised value of the house. The maximum we can loan is for somebody who's 90 years of age or older. FHA will allow us to loan up to 75% of the appraised value of the house. So that's kind of the stream or the spectrum of how much money can be loaned. From 62, we can loan 52%, and each year that someone gets older, we can loan just a little bit more money until we get up to 90, which is, we're capped out at 75%. So we could literally loan 75% of the appraised value of a home to someone at 90 years of age.
Well,
so those are some of the main things. They've got to occupy the house within 60 days. If it's used for a purchase transaction, they cannot be in default on any federal debt. Although with a reverse mortgage, if there's enough money available to pay off that debt, we still might be able to do the transaction for them. And now there are income and credit guidelines on the program, which there were not in the past. And there's several things that have changed in the last few years, and it's because of some of the issues that have come up that I mentioned earlier. So number one, FHA said, look guys, we don't want you to have to foreclose on some 85-year-old lady because she didn't pay her taxes and insurance. So what are we going to do about this? So they came up with several things. Number one, they said, you guys are going to have to do a financial analysis. A financial assessment is what we call it, to make sure that after this reverse mortgage is done, that little old lady has got enough income coming in from her Social Security or her retirement or whatever to be able to pay her taxes and her insurance, maintain the property. So we've got to look at those numbers to make sure she's got enough cash flow to do that. Secondly, they said to us, not only that, but we've got to pull credit and take a look to see whether or not this is somebody who is not only capable of paying it, but willing to pay it. Because if we look at the credit report and we see that this is somebody who's had a hard time paying many of their debts in the past, then that's going to be a red flag to us. that if we put this woman into this reverse mortgage, she may not pay those taxes and insurance, and then we are going to have to foreclose on her.
So there's a background credit check, things like that, I'm sure?
Yes.
Okay, so
So
you're going to be looked at?
Yeah.
Okay,
So we're going to look
it's
at
not just, here's the money,
Yeah.
go ahead, yeah. So-
However,
Okay.
the important thing for people to know is that the credit guidelines for this program in terms of income and in terms of credit are much less stringent than with a conventional mortgage.
Really?
Yes.
That's
So
interesting.
Yeah, so we can do this program in many cases for people who are just on Social Security income. Because we just need to make sure that there's enough cash flow there to pay those taxes and insurance now. Here's what we may have to do. If there's a question about whether or not we think somebody will pay these things, we may have to escrow for the taxes and insurance based on their life expectancy.
Okay,
And put
good.
that money aside to protect the senior, basically.
Right, Gordon, we got 2 minutes left, so
Okay.
I want to get to one question, then
Okay.
I know there was something you wanted to talk
Sure.
about before we close.
Okay.
What are some of the senior protections built into the program by the FHA? So remember, we got just a couple minutes.
Sure. One of them is it's required that the senior actually go through a counseling process. It's also that we make sure that they understand the program. FHA has strict controls over the fees and the closing costs on the program. There's a mandatory counseling. They have to go through that, as I said. There's no time limit on how long the senior can live in that house and, after they've gone into the reverse mortgage, no matter how high that balance gets. And no assets other than the house secure this loan.
Okay.
So there's a lot of things we talked about.
Yeah,
and
one. Go ahead, and
Yes.
one more thing you want to say.
I just wanted to let everyone know that we have put together a 28-page little booklet that's designed to cover a lot of the information that I talked about today and a lot more. It's free. You can call us, and we'll mail out a copy of it to you. It's 28 pages long. It's a lot of basic information.
Phone number you want to give, Gordon, so people might, they might
sure.
have questions about this. They might want to get a hold of you. You want to give them your phone number?
Sure. It's 505-897-4900. 505-897-4900.
Reverse mortgages and the retirement income crisis. Gordon Mitchell, reverse mortgage educator. And sir, you did a lot of educating today.
I did a lot of talking today. I hope some people got something helpful out of it.
We sure appreciate you being our guest.
Great. Thank you very much. Thank you for inviting me. I really appreciate the opportunity.
You bet.
All righty.
For the Department of Senior Affairs, I'm Ed Nunez.